what stocks are dropping, kind of on the fly as we go for the Monday market open. We'll do some live trading together. Tuesday will still be that same core information on the overall market outlook for the next few weeks ahead. We'll do some trading. We'll still do the Apex picks, the Newton momentum picks, and the hot sheet picks. Wednesday is kind of going to be our wild card day, wild card Wednesday. We're hoping to have a special guest on each Wednesday, kind of bringing new ideas and new thoughts. And we're going to have all sorts of ranges of opinions. People who are commodities traders, futures traders, day traders, income traders, you name it. We're going to have a good little mix on Wednesday. Thursday will be more of a strategy training as well. Nate and I will switch off between strategies we love. And then on Friday, we're going to do a recap going into the weekend, what to do to prepare for the upcoming weekend before the markets close. So that's what we're doing today. And I'll turn it over to Nate in a moment. He's got some cool information prepared for you guys, but I hope that you guys are happy about this new move. Give me a yes in the chat if you guys are excited about the daily opening playbook, 10 a.m. every single day. Give me no if you're not excited.
Yeah, you could be honest. You can say no, we hate it. Less FaceTime with you guys, the better. It's fine. We won't be offended.
Awesome. Bring it on, says John. I love it. Lots of yeses. Perfect. Well, like I said, I'm going to turn it over to Nate here in a second to give us our weekend review, our wrap up going into the weekend and how to prepare for that. But a couple things I wanted to point out really quick. And some of this is a recap from Tuesday. But does anyone know what the VIX just did? The volatility index, ticker VIX. Anyone been paying attention? Yeah, I hate it. April Fools. That's funny. So the VIX, which really tells us the implied volatility in options prices, how big are the moves coming? Some call it the fear index, but really it's just a volatility index. Look at this. Look at this bad boy right here. Shot past 60. Now, typically, if you're looking at the VIX and you see a level above 20, that means there's uncertainty. So there's pretty much been, let me see if I can go back. So here's our bear market, right? Obviously, a lot of uncertainty there. But since we bottomed out, we've been below that 20 threshold for the most part until election season kind of came up, right? We saw that little spike there. And then now with the tariffs uncertainty, we came all the way up here to 60, which is a very unusual reading, and unusual in the sense that it doesn't happen all that often. Only a handful of times every few years. Now, here's what's important to know. It is scary. It is uncertain, a lot of volatility. But the S&P 500 often rises in years after a large VIX spike. So here you can see the VIX spike, and you can kind of see what happens next. This is the S&P. This yellow line is the VIX. VIX spikes. What could happen next? Well, let me just show you the data. If we look back over the last 35 years, this is 35 years. When the VIX closes above 45, and just a reminder, it closed at 60, so much above that. When it closes above 45, typically that is the very, very, very best time to be buying stocks. And this is more for your investors. For any of those curious, is it a good time to get invested, or should I go to the sidelines, hit cash? That's your call to make. But I want to give you this analysis here, that if you look at the S&P 500 over the last 35 years, when the VIX spikes like it just did, that's these light blue bars. The average one-year return after that close, 37%. Quick question. Does the S&P 500 normally print 37% in a year? Anybody? Is that a very usual return? Obviously, the answer is no. This is a very rare, exceptional return here, and it's a great time, in my opinion. This is what I'm doing with my money, to get invested in certain stocks. I lean a little bit more speculative. I'll talk a little bit more of what that means, but this is why. Because we get this very rare investment opportunity to get, on average, triple the average annual S&P return. You don't get that every year. You don't get that every couple of years. This happens every once in a blue moon. So very cool to see this. If you're looking at the 5-year perspective, over 5-year average, S&P makes 53%. If you were to just buy when the VIX closes above 45, 136%. We're not talking about NVIDIA. We're not talking about, I don't know, Oklo, some crazy stock. We're talking about the S&P 500, 136% over 5 years. So I'm not saying to go load up on call options. I'm not saying to go over leverage your account. I am saying for those of you who can keep a longer time frame in mind, this is actually a great time to be buying stocks. And I called a daily discount right now of the Mag 7. I pointed out a couple names that I really like right now, but you can just see how far off their highs they're trading. Google down 28% from the highs. Amazon 27%. Meta 31%. Nvidia is almost 40% from the highs. Now this was from Tuesday, so it's changed between now and then, but it's still relatively around there. Now you might look at this and say, okay, I can get a 38% return on Nvidia, but it's actually way better because if you run the numbers, a 38% drawdown needs about a 60% upside to recover, if that makes sense. So yes, it's down 38%, but the upside is much, much higher than that. It's about 60% to the peaks for Nvidia. So it's a really, really great time, in my opinion, to be looking long term. What are some stocks I like? What are some companies I really like? Let me go ahead and get them at a discount right now while I can. Now, this isn't to say that stocks are absolutely, without a doubt, going to go up over the next year. I'm just showing you the data, the averages, and then you make your decisions based off of that. This is what I'm doing. This is what I've done with my own money. I've also done GEV, which is a stock I really like as well. I still have my insurance stocks. Those are good ones, but I wouldn't be surprised if we see insurance kind of slow down and these speculative stocks pick up again. So there's just a fun little nugget for you guys to kickstart your Friday morning. And the last thing here is I still love gold. Look at this. We did yesterday, Nate, we had a wrap order training session. And were you there?
No.
Okay. Yesterday we did a wrap order training session. I showed them the wrap orders and I told them typically you want to do this on stocks that are trending nicely, no crazy drawdowns. I said, sorry guys, I don't have really any great stock picks for you right now, but I do love gold. Look at that beautiful trend. 50-day moving average, 200-day moving average, just steadily cranking higher and higher. If you look down here at the Newton momentum, it flipped to a very green bullish candle yesterday. So we did a quick trade on gold. If you guys did that with the wrap order, it's up 55% already this morning as gold. Look at that. All-time highs on gold. I love it. I have some physical gold, Nate, and I told everyone I've been meaning to take it in and sell it so I can invest in some of these stocks while they're at a discount. Haven't had the time to. And currently at this moment, I'm glad I haven't done it just yet.
Yeah.
But
Well, I
gold looks
mean,
really good.
it's unbelievable. I mean, I've been pounding the table on gold for a while. I'm sure a lot of people in here know that on Roundtable, I mentioned you can't go wrong buying it. I gave some of my people on our last session the kind of what I call the stack trade. Just if gold ever goes down, just start buying debit spreads 6, 8 weeks out and give it some time to recover. I think a couple of you in here already probably hit your target because as much as I love gold, I didn't expect it to be up 7.5% in 3.5 days or whatever. But I think it's a no-brainer. And for me, the idea of just kind of having a stacked position where every time it goes down, you add more. Like there's not a lot of assets I put ahead of gold in terms of being comfortable doing that, at least during this cycle. I mean, I think the gold cycle is going to slow down at some point. By the way, I do think there's an interesting Bitcoin conversation to have at this point, which I'm going to mention here in a moment. But yeah, I mean, lots of good opportunities, and I think the VIX thing is really important because the reason that correlation happens is because we don't normally see the VIX spike to 50 and 60 in a grinding bear market where everyone kind of sees it coming. It's a slow, pressure. Like 2022, I don't know what the high in 2022 was. I think maybe 30 or something in that range. But when the market flushes and is crazy, normally that's a liquidity flush that can then come back into the market. And I think we're going to see that now. Whether we're going to see it, like you said, today, next week, next month. I don't know. There's the biggest thing I'm watching is for the insiders to kind of step back in, see insider buying, step back into the market because that's usually a floor on those dumps like we saw in 2020. I
To
did also
answer
say
that
I was going to load up
question
my
there.
puts if VIX hit 60, and of course I bought zero puts when VIX hit 60 because I was on meetings and distracted and missed a massive windfall.
Oh, on the VIX crash. The last time we got a reading above 45 on the VIX was the bottom of the COVID crash
Yeah.
when everybody could have bought stocks. I think maybe one of the most insane discounts of all time to ride the fastest rip back up. I don't think we're going to get that here because I don't think we have the interest rate cuts and the stimulus on our side this time. But just to give you an idea, that was the last time it happened. And think of the opportunity in March of 2020. So,
Yeah, absolutely. By the way, last thing to mention that right so far today, the biggest kind of like these dark pool orders that I like to follow, biggest one so far is on AGI. Second biggest one is on gold. So we've got gold happening all around the place in even in the back door. Susan asked if I mean cost averaging into GLD. Yes, but the way I do it is I cost average using debit spreads. I will teach you guys that full strategy on one of these opening playbook sessions somewhere along the line where I'll go through the entire process, how it works, why it works, the data, all of that. Today is not about that. We're going to cover a little bit of other ground. So let me jump in.
mhm.
Um, see if I can get my
And I put my background in outer space here because gold is currently in outer space, so I thought it'd be fitting.
Yeah, it really is. Um, just get my kind of controls in the right place. Thanks everyone, by the way, for showing up 10 a.m. on a Friday. We haven't done this before. Appreciate you guys making the time on short notice. I saw a whole bunch of my folks in here and a whole bunch of people that I don't think I know as well. But Stacy, Mike, Chip, Ken, Elizabeth, Skylar, KJ, all the folks who said hello. Henry, John, hope you guys are doing well. Let's go ahead and jump in. There's a couple things that I think are interesting to talk about today. And then at the end, I want to get into a couple live trade ideas. And I also want to give people an opportunity before my live automated options class with members to jump into that, which I mentioned in a second here as well. But starting with the sector overview, I always like to look at the sectors. There's a couple different things that I look for when we go into the sectors. One of them is, are they running together or is there divergence in those sectors? So are we actually seeing different things play out on a sector basis, or is it more they're running together strictly based on liquidity? And lately, it's definitely the latter. We're just seeing the market pump everything. Like I mentioned to people, we were seeing Walmart, Tesla, ExxonMobil, and Bitcoin all have the same chart basically for a while. So that tells you this is not a, hey, tariffs are going to affect one thing one way and another thing the other way, and we're valuing those. This is just straight, panic fear, panic buying happening across the market. What we're starting to see, in my opinion, is a little bit of a divergence on that. So we're starting to see things separate a little bit. And what I think is interesting is that some of the things that have been beaten down, like discretionary, which is this XLY ticker here, we're actually seeing hold up a little bit better, which was by far the leading, beatdown candidate going into April 2nd and immediately after. And now we're starting to see some of the things that we would consider oversold actually slow down. And so one of the tips that I try to give people is, if you think something is oversold, so you think Tesla's oversold, you think discretionary as a whole is oversold, you think Nvidia is oversold, wait for a big down day and see if they actually hold up better than a lot of the rest of the market. So on a big down day, you can often see, okay, yes, it's down 2% today, but the rest of the market is down 4.5% today. So maybe things are actually oversold on this particular asset. And so I called that out on a couple of these, and I think we're seeing that. The biggest one for me is just MAGS, MAGS. I think we saw that get oversold. And the fact that on the latest run, so after the kind of the first two big down 5% sessions, we actually saw the MAG 7 hold up better in the next couple of days of selling pressure than even the S&P, which is not normal. Obviously, MAG 7 should be your risk on, should be getting hit harder. But to me, it shows it's probably getting oversold. And we're seeing that on a couple of these other sectors. Also interesting to note, industrials holding up the best and theoretically should hold up the best over the next 90 days. And then if tariffs come back in, look for industrials to take another beating. Now, here is where we stand on the S&P 500. These are a couple levels that I've been watching for a little while. We had this initial floor before Liberation Day that we thought, hey, maybe we're headed up to all-time highs. Got a floor here, looking good. People are feeling positive. Obviously, that got absolutely smashed on April 2nd. And then we kind of found this next floor, which is right around here. And this candle literally covered the entire ground between those two levels of about 11% in one single day. So in my opinion, unfortunately, this candle kind of represents no man's land. Like I really think it's going to be hard to get any clear direction in between the bottom and the top of that massive, insane move that we got. And so I think if we break back above 548, this is the SPY. If we break above 548, it's going to look really optimistic. If we break below 490, 487, it's going to look ugly and probably get to our 25% correction level that we called out a while ago. So for me, this feels like a little bit of no man's land. Now, that doesn't mean we can't trade. I actually like trading in no man's land for a lot of reasons we'll talk about. But I think right now, the volatility and the fact that literally one day has covered, $38 of ground puts us in a position where we're not really going to get a clear break and go or anything like that in the S&P. So watch for the break above, watch the break below, be very careful in between would be my advice. Now, here is what I was mentioning about the MAG 7, which I find super interesting. So if you look, this is since liberation, right? Since liberation, we have IWM at the bottom, not super surprising. We have SPY kind of right in the middle. And what's held up the best since then? The MAG 7 has held up better than the indexes since April 2nd. So to me, that means that it really was starting to get oversold because obviously the MAG 7 led the pre-April 2nd decline, right? When the broad market, when the S&P was down, what was it down? Like 6%, 7%? And the mags were down, 15%. They were way ahead of the curve on the downside, which is no surprise because they're very risk on. Now we're actually starting to see, like I said, sometimes in the most selling pressure is where you can see whether something is truly oversold. I think we're seeing that right now in the Mag 7. So in my opinion, I told folks last Friday I was starting to accumulate on mags. That worked out very well when it jumped 14.5% in one day. And I think there's still more upside here on the Mag 7. I like Mag 7 in the short term, and the more beaten down IWM, I like in the long term. So for me, Q2, I like the mags to outperform, but my 2-year outlook, let's say Trump administration outlook, I actually like small caps to make a rebound. So focus on the Mag 7 in the short term, but still thinking about once that rotation happens, end of Q2 maybe, I'm going to flip over and start grabbing more small cap opportunities. And that's just kind of my long-term view here on those two assets. One other thing I want to mention, we have a surprise contender here in terms of stable assets. Obviously, I've been obsessed with gold. I've been talking about gold. I've been pounding the table on gold. But Bitcoin now, in about 4 different sessions, has responded very interestingly. So in 2 different sessions where the broad market was down 5-6%, Bitcoin was only down 1 or 2%. Then we had the massive 12% rally in the NASDAQ, and Bitcoin actually underperformed. It performed more like gold. Then on days like today, where the VIX is up, the ES, which is the SPY, and the NASDAQ are neutral, we have Bitcoin up 3.2%. So I'm not going to go out and say, yeah, Bitcoin has officially established itself as, a value, asset where now it's going to be risk off. But I think that transition might be starting to happen where people are actually thinking about Bitcoin less as the super risk on, kind of leading indicator and more as a value container. And I think we're starting to see that in a couple different sessions. So I'm going to watch that very carefully. And I think it's something to pay attention to. If Bitcoin continues to act more like gold than it does like Tesla, then we're not going to see the same kind of movements, even if we do get another kind of super cycle, which I expect that we will. We're probably not going to see Bitcoin have that same kind of upside. So just worth noting that when the VIX is up and Bitcoin is up and we start to see that correlation happen more and more, it's going to tell us that Bitcoin legitimately is transitioning to more of a gold type asset than a risk on, kind of crazy high volatility asset. All right, lesson of the week. Volatility is fun until it's not. So right now we're seeing some of the craziest volatility. Maybe you could make the argument the craziest volatility in 100 years with 3 different sessions moving intraday over 8%. So right now it's a day trader's paradise, right? If you're taking trades intraday and you're looking for, small moves and those small moves equate to 3%, it's a paradise, right? We're literally seeing some days that have 10% intraday moves. And so if you're just following that momentum, there's so much opportunity directionally. What's the problem? Well, as an option trader, we're paying for that mass expected move. So the market makers are no dummies, right? When the market's moving 10% in a day, they have to start baking that into the options market. And so you start paying for it. Now, they're not going to bake in a 10% move on the SPY, right? Obviously, they can't do that unless the SPY would have moved 10% every day for a year. So you're still at a net advantage if you're paying for a big expected move and the market moves 4 or 5%. You still have a big advantage. But at some point, that advantage comes crashing down. So on January 2nd, which was just a few months ago, if you wanted to buy a call option on the S&P, your most basic, highest liquidity instrument in the world, for the next day at the money, meaning just right around the same price the SPY was trading at that moment, here's what you would have paid. Okay, so you would have paid $3.47. This is on January 2nd, trading the January 3rd option. At that point, the SPY was trading around 581. If you go ahead and grab a $581 strike price, you're paying about $3. So between $350, that was standard all in 2023, 2024, the beginning of 2025, about $3.40, very normal price to pay for the next day's option. Any guesses on what that same option would have cost us a couple days ago on April 9th? So taking the same exact scenario where you just take tomorrow's option at the price that we're trading at right now. Some guesses around $6. Keith guessed $7. Anyone else? Again, $3 was about the normal for about 2.5 years straight at this price. $6. Here's what you would have paid. $9.41 for the very same option. Guys, I don't know how to overstate this. The S&P 500 tripling its price on a regular option is insane. That doesn't just happen. Okay, this is the most liquid, stable instrument on the planet, and the options are 3 times the price under the same conditions the next day at the same time for the same strike price. So this is where things can get a little dicey. And the way that I would say it is the biggest risk a lot of traders have right now isn't just direction, it's actually ATR. So ATR, in my opinion, becomes one of the single biggest risks that traders are taking on right now. When the level of movement slows down, and it certainly will, the option premiums are going to immediately decrease, including the ones you're holding. In other words, it's not like if you buy an option before and volatility is high, now that option is somehow grandfathered in where the IV is going to stay high. No, it's going to start collapsing in real time with the actual market. Let me give you a quick example. Okay, so let's say, just real quick here, you buy a call option and you're looking for the market to go up, and you buy it on April 11th, 30 days out, and the market's priced again like a 4% move on that option, right? And so the option goes up, you're looking good, you're plus 3% on the move, it's starting to gain some value. Well, if over the next couple days, the ATR starts to slow down and net movement starts to go down, this now is going to come back and bite you, because as the 3% now just kind of starts grinding in a normal sideways movement, nothing negative, just it starts moving 0.5% a day like we would all expect the S&P to move, you still paid for this huge move. And now the premium on your option is going to start to lose money, even though nothing about the direction changed. And that's where I think traders have the biggest challenge, is that as soon as that ATR slows down, now your options are losing value, even if your direction is totally fine. But there is a silver lining here that I want to show you, because that same ATR disaster that most traders will get caught off guard can be used to actually help you find the bottom. Now, don't get me wrong, I'm not guaranteeing that, there's some ATR hack that automatically finds the bottom, but you can actually watch the ATR and help you kind of avoid that scenario and find the bottom simply by keeping an eye on it. All right. And I'll show you that here in just 1 second. Before we do that, always the same reminders. Just a reminder, if you're a member of mine, you can email me directly. I gave you out my personal email. It's in there, so feel free to email me. Make sure you're in my Telegram and Graham's Telegram for that matter. And then make sure you're on the text list. For me, you get the stock of the day. Make sure that you're also on that SMS list. It's just a free list. You put your phone number in, and you get my stock every day. 3 days ago, it was GLD, and you would have done really well.
And one other note, guys, we have some questions about recordings. These will be recorded every day. Now, of course, we're going to give you some live trades here. So if you're watching the recording, those trades might be a little too late for you. You can check the prices. But those will be posted on YouTube on our Financial Wars YouTube page. I'll post that link here in the chat as well.
Perfect. MS asked a great question. What's the difference between ATR and expected move? Great question. ATR is what's already happened, the actual net average of the moves that have already occurred. Expected move is what the market makers are predicting the market to move. ATR stands for average true range. Okay, so let me show you something. Let's flip over to the charts. I'm going to show you something you can do super simple, step by step, that can give you an indication of how to get an idea of when things are stabilizing. All right, so let's go here to the daily chart on the S&P 500. So I'm going to start with the daily chart. This candle cracks me up every time I see it. Here we are on the daily chart. The next thing we're going to do is we're going to go to indicators. Okay, and then we're going to go to ATR, or average true range. Okay, so add indicators. Again, every single broker have this, whether you're on Schwab or anything else. I like TradingView just because visually it's really easy to see some of this stuff. The next thing you're going to do is you're going to add the average true range onto your chart. Okay. The next thing you're going to do is you're going to add the average true range to your chart again. So you're going to have two average true ranges on your chart at the same time. They usually show up right at the bottom like this on any platform. They're kind of, a oscillator that shows up at the bottom of your chart. And you want to have two different windows of ATR. Everyone with me so far? Just shoot me a yes in the chat if you are following me so far. You're going to go to your chart. You're going to add average true range two different times on the same chart. All good? All right, perfect. So the first thing you're going to do is on one ATR, you're going to go into the settings. So however your platform looks on TradingView, it's really simple. It just has this little button right here. Okay. And you're going to change the length to 10. Okay. So everything else is going to stay standard. You just want to change the first length to 10, and you'll click OK, and that will give you a slightly different number here based on the 10 length. All right. Then you're going to go to your second ATR. The first one you change to a 10. The second one, you're going to do the same thing. Click the settings, and this one you're going to change to a 5. Whoops, I just clicked out of that. You're going to change to a 5, and then click OK. All right. So top ATR, 10. Bottom ATR, 5. What we're doing now is we're comparing a smaller sample versus a sample twice as big. We're comparing how much has the market moved in the last 5 days on average compared to the last 10 days on average. And when the market's crazy, what we're going to see is that the short-term ATR is moving faster than the long-term. So for example, if I look right now, average move on the 10-day, $22.31. Average move on the 5-day, $27.89. In other words, the last 5 days on average have moved more than the last 10 days on average. Smaller sample size is closer to the chaos. It's moving more than the 10-day. What you want to do, what you can do to help you figure out when things settle is you can wait for the 5-day here to dip below the 10-day, right? So think of it like this. You have a 10-day window. It's looking at this. And then when the market gets crazy, the 5-day window is going to stretch and be above that. But when the market settles down, now this 10-day window is going to have more of the craziness represented. And if the 5-day starts slowing down, you'll see, okay, relative to the last 10 days, we're actually starting to slow down and stabilize. Okay, so that's what we're looking for. We're looking for the more recent bias to actually be more stable than a slightly longer bias. And when this dips below, so when we actually get lower on the 5-day than the 10-day, that tells us, hey, the market relative to a slightly longer period is actually more stable now than it's been. So let's actually go look at an example. Of course, the best example here is our dear friend COVID. So let's go ahead. Whoa. Let's go ahead and go to COVID. All right. Here's March 2020. Okay. So what we're looking at here is once COVID starts, the 5-day window is going to have a higher ATR than the 10-day because it's capturing more of the recent craziness. And if you fast forward this and we go through COVID, you'll see it stays higher. During the collapse, during the chaos, 20 versus 16, it was 11 versus 9. It's staying higher, right? Then something starts to happen. They start to kind of even out as the longer-term ATR. It's only a 10-day ATR. It's not super long-term, but it starts to flatten out, and now these numbers get a lot closer. Instead of this being 20% higher like it was, now it's starting to slow down a little bit. Okay. And if we fast forward a little bit more, okay, sorry, it's slow. Oh, whoop, whoop, going a little bit slow here. Okay, now we start to see, because this 10-day ATR is capturing a little bit more of the recent bias, now the 5-day is actually lower than the 10-day. Does everyone see how once we kind of slow down, once we started topping out, the 5-day actually is now less movement than the 10-day? Well, what's cool about that is that it actually ends up pretty much picking the stabilization point here on COVID. And you can see what the chart does now that that 5-day flips below. It's basically, smooth sailing from here. And it basically, where this happened, where we kind of got this jump in the stabilization, happened right when these switched. When the 10-day got less and the 10-day got more because it was still capturing a lot of the big move, and the 5-day settled down. And so this ATR gives you a little bit of a hint as to when things are stabilizing. And it actually makes perfect sense, because if you followed around any institutional traders or any of those guys, they'll often use that cliche, the market falls faster than it rises. So in reality, the ATR slowing down is a pretty decent sign that the market can go up, because the market truly does fall faster than it rises, meaning slower movements often are actually more bullish than faster movements. So just keeping an eye on these ATRs, it's a nice little trick to tell you, hey, the market might actually be building a foundation here because we're slowing down on average. And it also will help you with those options, because once you start seeing the ATR slow down, you don't want to be holding the options you paid for at peak volatility. One last thing to note here, we can also take advantage of this by doing the opposite. If we think the ATR is going to slow down, which I think it will slow down, we can go ahead and sell premium or get in the money spreads, taking advantage of that high IV. And then as the ATR slows down, that premium is going to be on to our advantage. All right. Does that make sense, everyone, on the ATR? Why the slowing down of the shorter ATR can be a little bit of a hint relative to the longer ATR of when the market might be stabilizing. Just want to make sure that part made sense. It's just a cheap, not cheap, a free, easy tool just to kind of keep your eye on and know, hey, things might be stabilizing here, not based on some predictive analysis, volume, or anything else, simply based on the fact that the market is slowing itself down, which is usually a good sign. And yes, the difference is just 10-day and 5-day. Side by side, which number is bigger. Okay. Dan, average true range should be free on basically any platform. Any platform you go into indicators and search ATR or average true range, every single platform should have that one for free. Okay, so now one more thing left on my agenda before we talk about automated options, which I'm super pumped about because we're going to do a live trade today. One more thing left on the agenda is our free weekend trade. And the question is, do you guys want to do the high risk trade or the lower risk trade? That, my friends, is the question. I will leave it up. Can I do a poll? Maybe I can do a poll. I don't know if I could do that in here. Is it possible
I still
to do
haven't figured it out.
Somehow someone did one the other day.
I think it's an app.
Is it an app?
Wait, what was the question?
How to do a poll? Because I was on one the other day.
Oh, no, it's in
Delaney did
here.
one.
Yeah, I can do that for you
Live
guys.
polling app?
Yeah, no, it's inside.
COD poll?
No. So like, wait, okay, hit the more button. Do you see
Yeah.
where yeah, and then you should see it says, actually at the very bottom, it will say polls and quizzes, or it will be at that more app.
I think maybe you have to, maybe someone who's like the
Making you a
host has
host.
to do it, because I
Yeah.
can't.
It is.
Here, I just made you a host. You should be able to do it.
Oh, okay, wait, let's see. Oh, no, I still don't have it. I have live stream and whiteboard.
What? Graham, I'm making you a host. And
I can't do it either.
Oh, Nate has to make me a
Whiteboard,
host now.
record,
I can't take it
transcript.
back.
So you could see it, but we can't. Like, so you
Yeah.
must have like added the app.
No, it was always there. There we go. I have it now. I didn't have it before. Okay, so what's your question? I will just
Okay, the question is, do we want the high risk weekend trade or the low risk weekend trade for our official Friday weekend trade? Which, by the way, we have been absolutely on fire lately. 5 for 5. Well, actually, going back further than that, like 7 for 7 on our last 7 weekend trades. So we are on a tear here. All right, beautiful. We've got it up. You aren't allowed to vote, Graham, it says.
Oh.
All right, everyone, you got 20 seconds to select your option there on the pool. So don't type it in the chat. Click it in the actual pool there. You got 20 seconds, and then we will find our trade. The high risk one's definitely. I mean, it's a little wild, but I like it. And then the quote unquote safer one. I mean, we're not talking super safe because we're going for a short term trade here. But
You want to stop it?
all right, yep. Let's go ahead and call it. See what do we get. Oh, okay. 69% said low. All right. Well, it was 70-30. That's close enough to do both. Fine. I'll do both. All right. Let's rip through these real quick because I do want to get to automated options, which I'm absolutely pumped about. We're going to do our live trade today. And I want to give everyone time to get in before our live trade. So I'll give the people what they want. We will do both trades here on the free weekend trade. Normally, everyone says high risk. So yeah, that's an indication right now that people are feeling it a little bit with the low risk winning. Since now we know Nate really wanted to do the high risk, he said, because I said I'll do both as soon as low risk won. You know me too well. You know me too well. All right, let's jump on in it. Okay, so I said high risk. I wasn't joking. Everyone ready for the high risk? We are going to none other than TSLA. Let's ride. All right, folks. Our high risk trade is on Tesla. We are going just 6 days out because we have a Good Friday next week. So we have a 6-day option, which we never get to trade 6-day options on Tesla on a Friday. So, fun for that alone. All right. We are going here to try to find a trade that's just a hair inside of our, what Graham would call a wrap order, right around the current price. And we're going to see if we can get, 40, 50% ROI here with a small move in Tesla. Now, keep in mind, Tesla right now, I mean, I don't have the ATR up on this chart, but it is booking lately. We only moved about $6 today. That's a small move for Tesla. Our range has been like, 245 to 259, $14 here, 256 to 239, $28 here. Obviously the craziest day ever when it moved like, $50 in one day. So we've got a ton of crazy movement. And there's a couple ways to do this to take advantage of crazy movement. One is to try to pick a direction. The other one is to do what we often do, which is use a spread. And then if we get one of those big moves at any point in the next 6 days, it should knock us out with the profit. And I also think that if we stay on this side of the line, underneath price, if ATR starts to fall off, which I think it will in the next week, now that premium actually works to our advantage instead of against us. So right now, Tesla's trading at 247. So we kind of want to grab this 245, 247.50, right about where price is, getting slightly under it, and see if we can get filled with enough juice on it. This one's trading 140 to 150. Let's see what the little bit higher, about 150. Let's see if we can get into this one. So I'm saying 140. Let's see if we can get into this 242.50, 245 for less than about 160, because that gives us completely underneath the current price, which I like, but still obviously pretty aggressive because we're trading Tesla. So what we would do here, let me go ahead and type it in the chat, folks, is we would buy to open the April 17, 242. Sorry, I'm trying to type while looking over my microphone. 242.50 TSLA call. We would sell to open the April 17, 245 TSLA call. And I think we can get around $1.50. We'll see what this actually fills out. Spreads are crazy right now. So what this allows us to do here is actually stay underneath price and still target, 75 or 80% ROI, depending on our fill here, with as long as Tesla stays above kind of our line in the sand here around 245. But the key here is we're not actually trading this to try to predict that Tesla is going to trade above 245. Because for me, I'm not trying to predict where a stock's going to finish almost any time, let alone right now. So as soon as we get this trade in, what we're actually going to do is we're going to put a target on it. So let's first of all, I'll just try one contract here, so I'm not front running anyone with a whole bunch of volume. 143. Let's see if we can get filled here. And what I'll do, guys, and especially in this market, I'll just kind of move my my price up, see if I can get filled, move it up again, see if I can get filled, move it up again. Just kind of take my time and see what the best price I can get filled in. Let's go ahead. I'll bump it up to
James got filled at 145.
Oh, wow, James is all right. Nice. 148.
What brokerage are you using, James?
Oh, there we go. 148 filled instantly. So I might even paid a couple pennies too much. So this one got filled for 148. Now let's just go do the old-fashioned thing here and see what our profit potential is. So what is our profit potential on this trade? Well, the max that it can be worth is $2.50 because it's a $2.50 spread. Okay, so the max that it can be worth is $2.50. So if we paid 148, we just take 250, we divide it by 148, we get 168 minus 1, and now we know that our profit potential here is 68.9% ROI. Okay, so that's the full profit potential. What does that mean? It means if we let Tesla expire and it expires above 245, we would return 69% on this trade. But I almost never do that, okay? The reason I don't ever do that is because I think that predicting where a stock is going to finish is really hard. And I think it's asking a lot, especially in the chaos that we're having now. So what I do is I put a target on this trade for somewhere around half the ROI potential. So maybe around 40, 50% in most cases here, maybe 35 to 40%. And that way, if you just think about it from a chart perspective, instead of saying, hey, listen, at some certain point over here, I predict that the market's going to finish here or here. Instead, I just say, listen, I'm going to give it all this room. And if we make a big pop anywhere during that trade, I'm going to get cashed out. I'm going to be on the sidelines, even if Tesla drops, 20% and finishes way below that level. And that's really the kind of trading that I love to do. I like to do trading where I put myself in a position where at any point during the trade, if we get a big move, I'm going to be cashed out on the sidelines and I'm not actually predicting where the stock is going to finish. So how do we do that? Super simple. All we do is go to the trade that we just opened, which is right here, and we create a closing order as soon as we're filled. In Thinkorswim, all you do to do that is right-click on the asset and choose this Create Closing Order button. In this case, since we bought the debit spread to open, we're going to sell it to close. We paid a debit to open, we're going to get a credit to close. Okay, so you create your closing order, and then you're going to sell the vertical back. Again, not to beat a drum here, but you bought a debit spread to open, you sell the debit spread to close. Okay, how much are we going to go for here? I'm going to go for about $2. Okay, so $2 at 148 gives me still a pretty juicy ROI. And again, it puts me in position where I don't need a massive move and I don't need the market to finish where I want to make, 35, 36%. So to do that, all I do is go into the credit here. I erase where the price is right now. I put in my $2 credit, and then I go to good to canceled. Okay? So good to canceled, that's going to sit in there, and that's going to help us where if the market gets a pop, it's going to take out that target. Everyone following? Make sure that's good till cancels. That means that order is going to sit in there for the next 6 days until Thursday. And if we ever get a big move, the broker should take us out with a win. Okay, looks like that. You send it off. Now that order is sitting in there. Okay, what if you want to do the same thing with a super aggressive version of trading Tesla? Well, then what you would do is you would go what we call out of the money. Okay, so instead of saying like, hey, I'm going to stay below price, and as long as we get, as long as it stays on my side of the line, I'm going to get extra value. And if it pops above, I'm going to hit my target. Here, we're saying, listen, I need the price to move in my favor to get on the other side of my line in the sand. You'll often hear me call this like a jump trade, for example. Well, to do that, all we're doing is moving higher. What I usually would do on this is I'll just go to a chart. Okay, I'll look at a chart like a daily chart, and I'll kind of pick a level on the daily chart that I want the price to move. The level I've been watching on Tesla is this $300 level, but of course I'm not going to trade it $50 out of the money because that would be wild. So I'm just going to kind of pick a level in between, maybe like a 270 area on Tesla. Now, what you'll see is if you do that, okay, so if I widen my strikes here and I look for some more prices, and I go down and I say, hey, I actually want to buy the 267.50, 270, this price is going to be a lot less. We're going to try to get into this trade for something like, 60 cents, 65 cents. But the spread is still worth $2.50, right? So if you take 250, you divide it, in this case, by, let's say we pay 65 cents for this, minus 1. Now our ROI isn't 60%, it's 285%. Why? Because now we're saying, hey, I need the market to make this move in my favor to a significant degree in order to hit a target. Okay, so then the follow-up question, why do that instead of buying calls? Two big reasons. Number one, calls are very expensive. Most people trying to buy calls on Tesla, they're not, they want to take a high risk trade. They don't want to put $2,000 on the line, right? So that's the first reason. You can trade these extraordinarily cheap relative to the call options. Number two, with the call options, you're paying for all that volatility. You're paying for all that expected move. Here, we can just pick whatever line in the sand we want. We can trade it at 260, at 270, at 280, and we're cutting out all that extra volatility. As long as it gets on our side of the trade, we're going to make a really nice profit. For example, if I trade this 270 spread that I just showed you, if Tesla finishes at 270 and 1 penny, it's going to pay me 284%. Whereas if you took a 270 call and it finishes around 270, you're losing all your money. Okay, so that's the difference between a call option. 284% and negative 100% is quite literally the difference between those two trades. If you guys want to take the super high risk one, let me just give it to you. Obviously, I don't recommend taking this with a whole bunch of contracts. This is meant to show you what a high risk, big mover trade can look like. So let me go ahead and type this one out. Again, same expiration date, folks, here. We're looking for a big old move in just 6 days. That's why I said super high risk. Just want you to be mindful of that. 270. And we're going to see if we can get into this for about 65 cents. Okay. That is the high risk, just to be very clear. All right. So high risk trade here, looking for the market to make about a $25 move on our behalf in 6 days. Now, obviously, under any circumstance, that's high risk. What I like about the market right now is that Tesla can pretty easily make a $20 move in a single day. That's actually not all that much. And so if we get any kind of pop, and like I said, I think the Mag 7 are the most oversold right now. I think if we get some bullish recovery, they'll move outsized to the upside as well, just like we saw earlier this week. And so I like that move. So if you want to set a target on this one, you could actually set the same target. You could set a $2 target on this one. And now instead of making a 35% ROI, you're going to make like, a 200% ROI if you put a $2 good till canceled target on that one. So let's see, by the way, I didn't even see if I get filled yet. I'll just do a example contract. You might have to give this one a minute. We're going pretty wild out of the money here. Oh, look at that. Filled instantly. Who am I kidding? 65 cents. So our potential on this trade is about 290% ROI. When you're doing a good till canceled order on a debit spread, you're always putting the closing order in as a credit. Remember, we paid a debit. We want a credit to get out. We want to get a credit for more than we paid to get a win. Okay, so 3 different scenarios for how this trade's going to end up. 1, it's going to hit our target when we make money. 2, it's going to expire. It's never going to get up big enough for us to hit our target. It's going to expire below both levels and be worth $0. Okay, so those are the 2 most obvious ones. Those are the 2 that are going to happen 99% of the time. Third one is it's in between strikes. It hasn't really, made a big enough move, but it hasn't moved far enough below to stay below it. Very unlikely in this market because we're probably, going to get a big move in one direction or the other. If it's around those strike prices, you just want to close it manually at the end of the day. So you want to keep an eye on it Thursday. If it's not closed yet, you want to take just a manual exit, get out of the trade just to make sure that you are out before expiration. All right. The next thing that I want to cover real quick here is kind of what Graham talked about. So Graham talked about the fact that the VIX hit 60. When that happens, we normally get upswings. When that happens, the market normally makes all-time highs. And if the market's down 20%, that means it has to move 40% to make an all-time high. In my opinion, I've been saying this now for 2 weeks. I firmly believe it. It is the traders who are not beaten up and on the sidelines and are ready to take advantage of the next, rally that are really going to be in prime position. I think most everyone looks back on 2020 and says, geez, I wish I just would have hung in there and then doubled down, at the bottom of that and take advantage. Everyone who pulled their money out in 2008 wishes the same thing. I think this is another one of those opportunities. So people have asked me, hey, Nate, you're mostly bullish. What happens in a market flush like this? Full transparency on all the strategies that are net bullish, I take some punches in the face when the market drops 20% in the course of 5 weeks. But for me, it doesn't really change anything about my narrative because I believe that overall, the market is going to be more bullish than it is more bearish over time. And I specifically believe that after those big flushes are the best opportunities to be bullish. And so for me, we're getting close or maybe even at where that opportunity really starts to play out, in my opinion, where the people who are on the sidelines for now are going to watch as the market moves without them, and the people who are still in the game are going to take most advantage. And the way that I'm going to take advantage primarily is with my flagship strategy, the one that actually Graham and I first, talked about, I guess going back like 2 years now, called automated options. What I do in this strategy is actually a version of what I just showed you, where all I do, especially when the market gets bullish, is put myself in position where any of those bullish moves take me out with profit, and I just stack it, do it over and over and over again. In fact, I have a trade that we're putting on live in just a couple hours today that you can all join me for in that live session if you are part of automated options. So that's the next thing I want to do, kind of shameless plug here. I want to recommend that every single person who is interested in, not just hanging in the game, but taking full advantage of the next run up, because I think we're starting to get in that ballpark, is a part of automated options. It's quite literally my highest confidence bullish trade that we take. And the cool thing is I don't actually need it to be net bullish. I just need any opportunity like we got this week. I mean, not exactly a pretty week, but if you had the trade on, you would have smashed your target on the big jump up. And that's really what we're looking for. The cool thing too is that I am in automated options. I filter out a lot of the craziness. So for example, we've only had one trade in the last 4 weeks and it was a winner just because we've done a really good job of filtering out the noise. But now I think that we are really prepped for the next run, and I want to take full advantage, and I'm hoping that everyone here wants to take full advantage, and this is kind of what I suggest to take full advantage of.
Cool, and this is all done for you guys. It's really, really awesome. The feedback's been tremendous, Nate. I think this might be one of our programs with the most amount of people raving about it, so definitely pay attention.
And you guys know the drill. Profits performance, no guarantees, all that good stuff applies here. We have about a 70% win rate on this strategy, targeting about $1,250 per week on average using my $2,500 stake, which is kind of my standard trade size here week over week with this strategy. So if you're new and you don't know who I am and you think I'm a 17-year-old kid, I'm not. Don't worry. I belong here. I work here. My name is Nate Tucci. Thanks for jumping on the webinar today. And if you'd like to learn what I think is probably the most straightforward way ever to target $1,250 every week, then just give me a yes in the chat, because that's exactly what this entire presentation is about, using a simple mechanical strategy that targets about $1,250 week in and week out consistently as soon as we get an opportunity that triggers. So thank you, all of you who are saying yes in the chat. If you're here and you want to, kind of take on that, what I would consider the most systematic way to do that, then you are definitely in the right place, because automated options is all about hijacking bullish moves in the stock market, which I really think we're getting darn close to an opportunity that's really gonna rip. It's not a matter of picking the next Amazon. We're not guessing the next AI moonshot, or even predicting how this trade war is going to get resolved, when it's going to get resolved, how it's going to get resolved. As long as we deploy a certain type of trade before the end of the week, anyone has a chance to target right around $1,250 in a matter of days. But that's actually not the best part. Unlike most methods, you don't need to know when to even exit this trade to get out a win. And I mean that literally. To exit these trades, you don't need to stare at charts. You don't need to click any extra buttons. You don't need to sit around waiting for an alert from me. Once the trade is activated, we sit back and let it do its work automatically. Like on June 14th, anyone who took a trade just verified it by the end of the week, 3 p.m. on Fridays, basically, when we're going to get in. You could have packed up the kids and hit the road for a getaway and checked back to find an extra $1,153 sitting in your account just a couple days later. The next week, June 21st, as long as you get the automated options set up before the end of the week, you could have been playing golf at Pebble Beach with your phone in the golf bag, which I was happy to say I kept my phone in my golf bag almost the entire trip to Pebble Beach, like a good actual vacation person. As hard as it was, I did that and ignored your brokerage account until you got home, found a crisp $1,250 in extra income sitting in your account. Rinse and repeat. July 5th, take 2 minutes, get into the trade, maybe go to the beach with the family or just relax a little bit. Whatever you want to do in your free time, that's not the point. The point is, regardless of who you are and how you like to spend your time, just a few days later, your account could have shown another $1,105 in extra income this time around. Now, before I get too far, let me just be very clear. I'm not saying this is guaranteed. I'm not saying there's an instant income magic pill. With anything in the stock market, there, of course, will be winners and losers along the way. That's why for the next couple minutes, forget about becoming a next, overnight millionaire. We're not going for all-in multi-1,000% trades. Financial freedom doesn't happen overnight. It happens bit by bit through the hills and the valleys, 1 week after the next. And that's really what this strategy is all about, grinding it out week after week. And with automated options, which I'm sharing with you today, my hope is that your trades could be a little less stressful and make your life a little more enjoyable. Now, if that sounds even a little bit enticing to you, then just hang tight, because in a few moments, I'm going to invite you to join me for our next live trade on automated options, where I'll share it right in front of your eyes, giving anyone who follows along a chance to target $1,250 this coming week, essentially hands-free. So welcome to automated options. Like I said, I've been chomping at the bit for an opportunity to get all in on automated options once again, and I think we're about there. Like I mentioned, my name is Nate Tucci. Despite being obsessed with the stock market and having some pretty cool success stories, including publicly growing this 10K account to north of $50,000 in just 4 months that I shared publicly with everyone, or hitting over $100,000 in my buy and hold account last year, which I was super proud of. My goal isn't to be on TV talking about trading. You're a lot more likely to find me at the beach with my kids or at a Penn State game with my brothers than in busy New York City. And today, I have more freedom to do those kinds of things than ever before, thanks to what I believe is my biggest trading breakthrough ever. And it's not just me. Like Steve said, he's made money, Roger, who's made money, David, who's made money, and dozens more, just by using a few minutes, a couple clicks inside their brokerage account, and setting up their very own automated options, targeting extra cash week after week. Options that, according to our testing, have paid out an average of about $1,250 in income each time there's an opportunity that works out. Now, you've all heard me talk about why people need consistent cash flow. I mean, I've been beating this dead horse, going all the way back to 2023 with inflation hitting middle class and lower classes the hardest, which is why the average savings account is the lowest it's been since 2008, and credit card debt is at the highest it's been. So why are savings at the lowest level and credit card debt at the highest level? Because of the simple math. Today, the gap between the average earnings and the average expenses in the US is literally negative. So folks who are looking to fill that gap are looking for stock market as a potential source of extra income. That's why we've seen millions and millions of new accounts in places like Robinhood and Schwab and E-Trade. Yet most folks end up losing money trading on their own. And I think it's because while the stock market is an amazing way to target extra income, most people go about it exactly the wrong way. So today, I'm really hoping that we can together flip that around and change everything. If you're someone who's been on the wrong side of the stock market, I'm really hoping that today is your day where we can kind of turn the tables around, because you can now activate your very own automated options right from the comfort of your living room or your bedroom or your bathroom or your vacation home or wherever you want to be. It doesn't matter if you have a multi-million-dollar retirement account or you're just starting out with a few $1,000s. All you need, as I always say, to do this, anyone can do this. You need a standard brokerage account. You need an internet connection. You need about 2 minutes to set up a trade before the end of the week with automated options. And if that's not easy enough, don't worry, because this week I'm going to walk you through our very next automated option trade live in front of your own eyes, targeting an extra $1,250. Again, that's right around the amount I'm always using, just like back in July. Now, if you guys remember, July was a total fake out last year. Started off hot, ended up coughing up all the gains. And if you had $2,500 invested, again, that's the amount I'll use in all of my examples, you would have ended up losing a little bit of money in the regular stock market. And if you bought call options, well, you would have taken, basically 100% hit as the market melted away. But if you would have been trading automated options, it's an incredibly different story. Trade one at the beginning of July, $1,250. The next one here in the middle of July, $1,406. And as I'll show you, as long as the position is activated before the end of the week, you don't even need to know when to exit these trades. We just set up the same automated option over and over again. Like number 3 here toward the end of July, another $1,250. And when the S&P was actually getting the very worst of it at the end of the month, we still hit our 4th trade in July for $1,105. So that income gap you saw earlier, which is why so many people are feeling, the pain every day, swiping that credit card way more than they should. It has the average household at about $5,000 a month in expense. Basic things like healthcare, food, transportation. We're not talking about vacations. Meanwhile, the average monthly income is $4,340 a month. All right. So obviously it doesn't take a mathematician to figure out those numbers don't add up. That's a huge income gap that a ton of people can't fill right now. But my goal is for automated options that they could help everyday people fill that income gap and then some. Now, of course, hitting 4 winners in a row is not going to be an everyday thing, right? We're not always going to hit 4 trades in a row. Don't get me wrong. But in just those examples, which happened back to back to back to back, that would have added up to about $5,082 in extra cash coming through the door, enough to cover the average month worth of expenses without even having to dip into the paycheck in that month of July. Meaning the money that you actually work hard for can be used on things you want to spend it on, or maybe like a lot of people need right now, just building up that rainy day fund, maybe just depositing it into your brokerage account and trying to scale your growth. And even more impressive is that it happened when the S&P 500 was totally in the toilet, which I'm sure reminds us a lot of what we've seen recently. So that's why today I'm going to share exactly how this is possible, how regular folks like Sandeep were able to see some tremendous results so far from automated options, and of course, how to set up your very next automated option this coming week. But first, let me just be clear. If you have a job, I'm not telling you to quit it. Obviously, please don't misunderstand me. If you've been steadily saving for retirement, please don't stop because you think one trade is going to solve your retirement. That's obviously not the case. My goal and what I'm sharing with you today is meant to supplement your income. And it's using a new technique that I really don't think anyone else has figured out the way we figured out. And if you're here right now, you probably already know what I'm going to say next. That with any strategy, there's risk, there's winning weeks, there's losing weeks, and that's part of the game. So I'm not here to tell you, hey, every time we trigger, we get a win. But we have tried to optimize this as best we can with automated options. Now, of course, no one's going to guarantee future returns, but when you account for all the setups we've seen so far, we've had about a 75.3% success rate going all the way back, each and every one targeting right around $1,250 on average using that $2,500 stake, just like we would have seen back in May of last year. So you might remember, again, markets were up and up, then all of a sudden they were not. The nightmare scenario where we warned you about, hey, markets could go down at any point in time. Now, this is exactly it, right? Markets are unpredictable and losses are always a possibility, except that May example actually wasn't a loss. Because while some people were panicking, trying to read the tea leaves of the market, you could have blocked out all that noise and simply set your automated option trade before the end of the week and then worked out on your full-time job like James was, or maybe caught a flight home like my student Carson was, and ended up with $1,326 without even paying attention to the market and ignoring all that chaos in May. And the next week, it actually was the same story. So June 7th, set your automated option. Maybe this time you're like my student Jeff, who actually closed his trade while he was working on patience, or Carlos, who actually got his trade triggered while he was at his house without power, which is one of my favorite stories. He said he was powerless to close the trade literally and figuratively. Frankly, it would not have mattered what you were doing because your brokerage account was automatically set up to close this trade. In this case, a really nice winner here of $1,354. So to be clear, as long as the trade was placed before the end of the week, you could have ignored the media, tuned out the herd, just relaxed and enjoyed life, maybe spent some time actually living, doing something with your kids, visiting your grandkids instead of staring at the charts, which I know is very tempting to do when the market's chaotic. And if everything works out, you watch as that trade gets cashed out automatically for a great win. If you put more into that, so if you put 5K into that, it's at $2,680 in about 14 days, which is nearly double the average weekly income in the US. And folks could have earned it with just one of these automated options. No complicated planning, no boring stock reports, no burning the midnight oil. This trade is designed to do all of the heavy lifting for us. Now, if you're wondering how this is possible, I'm talking about all these kind of beautiful trades that automatically close out. I'm not talking about buying a pullback or spotting a perfect momentum breakout. These repeatable opportunities are all thanks to the way that we hijack some of the most popular options out there. See, when most people think of the word options, they think about buying options, which is an extremely hit or miss game. You see, contrary to what you might hear on CNBC or so-called financial experts online, the traditional way of trading options doesn't tend to work out that great for most retail traders, which is why that Chicago Mercantile Exchange that I always share with people shows that over 76% of the time, these options actually expire worthless, which means if you want to buy options successfully, you have to be incredibly accurate. You have to time the market just about perfectly to have even a chance of winning with, regular calls, puts, whatever it is. And in this market, good luck, right? Because if you're buying options, I don't even know what to say. That the volatility is so incredibly high. You're paying incredible amounts, and then the market's just totally chaotic. And so it's in these market dumps, just like we've seen the last couple of weeks, where I see folks typically blow up their accounts. They start in 2023, they have 2 years of good gains, and they blow up their account in a matter of 4 weeks. But thanks to the new way of hijacking options, we can target income regardless if the stock market ends up finishing up, down, or flat. And instead of losing 76% of the time, our data shows just the opposite, a remarkable 75+% of the time, hitting an even juicier risk-reward ratio. And thanks to this special type of trade that we set before Friday's close, we're often able to collect even if the stock ultimately ends up going completely against us. Let me show you exactly how that works. So here's June. First week, markets went up. Following week, markets actually ended up going down. Still hit our winner, 1176. And each week we have the same opportunity, like the very next week, where the markets barely budged from June 23rd all the way into the beginning of July, and yet we still hit a winning trade, in this case, $1,406 automatically deposited. So in the case of the June examples, up, down, or flat didn't seem to matter. You could have had a chance to pocket extra income week after week, regardless of what the S&P was doing. And we're not talking about 5% income trades, okay? We're not talking about making $150 on a $2,500 stake. We're talking about $1,250 on each winner on average, nearly 10 times better than traditional income methods. And that's why so many of my students have been raving about automated options ever since we launched it, like Gerardo, Les. I have, probably 250 of these. Michael is another one. And so let's talk about how this is actually possible. Because again, I'm showing you lots of examples. I'm showing you lots of case studies of how they work out. But let's actually dive into what makes this trade work. So if you look at this candlestick chart, it's not exactly the perfect trade that you'd probably want to own, right? Probably not a stock that gets you excited. But what if I told you that this chart action was actually a hidden treasure trove? You see, I'm deploying a unique set of options that don't rely on big bullish moves where a stock needs to finish higher. All I need for my trade to pay out is a move of around 1% or more at any point over the next 2 weeks, meaning the stock can end up going higher or lower or nowhere over the 2-week period. But as long as we get that jump at any point during the period, we should see the trade automatically cash out and deposit a profit into our account. You don't need to predict where the stock is ultimately going to end up for automated options to work, because that's where most people get it wrong. They try to predict where and when the stock is going to finish. All we need is a move at any point during that 2-week period. So again, just to be very clear, as long as the stock makes around a 1% move or a little higher, depending on where you're at in the trade, your brokerage should automatically cash you out even if you're not paying attention, even if your laptop's closed and you're on vacation, you should automatically get a winner at any point during the trade that you get that move. So it doesn't matter how ugly the chart looks, or if you never look at the chart at all, as long as we get that move at any point during the 2-week period, our brokerage should automatically cash out and pay us right around $1,250 in income, even if the stock eventually drops. And let me assure you, we're not doing risky naked options. We're not doing expensive straddle strangles, nothing like that. You can set up these trades with about $50 a contract on average. So of course, it's okay to start small and then scale up over time. And after placing just one or two of these trades, I think it'll become second nature. Like many of my students who had never placed one of these trades in their lives before, and now they're absolute pros at trading automated options. Just like we would have seen here on April 27th, you take 2 minutes on Friday, just like we're going to do this Friday together if you want to join me for it, set up the trade before the end of the week, and anyone following along would have hit that target just a few days later with a beautiful $1,406 winner, even though the stock eventually sold off and didn't finish where we would have liked it to have finished. Didn't matter. May 3rd, same kind of thing. Click a few buttons on Friday, get that trade set up. Now, most folks are getting frustrated watching the market go absolutely nowhere. Anyone using automated options would have collected another $1,250 as the market literally went nowhere. So having a real shot to cash in while most folks are losing money is the most appealing, or I should say the second most appealing part, because most people lose money in choppy markets. But doing it without needing to know when to exit is really the absolute best part, because that's where really traders struggle, staring at the charts, asking themselves, do I get out now? Do I get out later? Oh, I should have got out, or I should have waited. Take all that noise off the table, set up the trade. You don't even need to know when to exit. Just set up your trade, set up your target, and let the market go to work with you, for you. And this baby works up, down, even choppy markets like we've seen dozens of examples of so far. So you're probably wondering at this point, okay, Nate, you talked about Friday. How do I get in on the action? Well, obviously, you can't blindly go pick out, any option. If that were the case, I think everyone would have figured this out by now. You have to know which trades to place. And that's why I want to show you every single thing you need to know about this strategy starting right away, so that anyone can start using this method to cook up some extra income right away. It doesn't matter who you are, where you live, young or old, anyone is welcome to get started today. See, I held a 90-minute live step-by-step workshop showing folks exactly how to get started targeting these payouts with just a few clicks of the mouse. It includes full details from how to place your first trade to how the automated options work, so that you can start using this technique in your account today. And thanks to a risk-cutting trick that we developed, we've been able to hone in on the most bullish weeks in the stock market. That's why we've really done a good job of sidestepping this recent collapse. And that gives us extra peace of mind, because it takes the win rate from around 55%, if you're just trading automated options blind, all the way up to about a 75% win rate. Now, typically, this class alone would be worth $497 or $997, but today, I'm going to let you claim the entire class for free. And once you get your hands on it, I think you'll actually be shocked at how clear-cut and systematic and simple this strategy is. And you'll immediately be able to use it each and every week if you want to. After just a few buttons, you get this trade locked and loaded, and that's really all there is to it, folks. Just like you could have seen at the beginning of the year, January, set the trade up before the end of the week and collected extra income hands-free as the brokerage clocks you out automatically. Again, the next week, take a minute, set up the trade on Friday like we always do, as long as it triggers, and let the trade go to work for you. And of course, any regular brokerage account will work. Schwab, E-Trade, Tasty Trade, Fidelity, Robinhood. We even have some Canadian folks using Interactive Brokers and following these trades. I have students across the map, across the board, using every different kind of brokerage to do this. And if you have a 401k or IRA, that will work as well. And if you want to see just how powerful these automated options are with your own eyes, then our next class on Friday, I'm going to place my real money automated option trade like I do every week. It triggers, targeting about $1,250 this coming week. Again, as long as the trade triggers. That way you can follow along, watch over my shoulder, and even copy and paste the trade directly in real time as I put the trade on. And I think it's perfect timing. If we get the melt up like we're starting to hopefully see, up 3.5%, 4% today, we should be able to see some really big juicy moves that set up perfectly for automated options. Today, you can claim access to the workshop so you can start implementing this strategy in your own accounts just by subscribing to what I believe is truly the most powerful income technique on the planet. Of course, I'm talking about my flagship strategy, Automated Options. This service is solely dedicated to targeting extra income automatically, thanks to hijacking these specific options for what could be really nice profits without even needing to know when to exit. Again, I mean that literally. We set up the trade Friday, we lock it in, we close our computers, we walk away, and that trade now has 14 days to go to work and try to target that automatic win without us doing anything, without watching the charts, without waiting for an exit, without doing anything except for letting that trade that we set up go to work. And after analyzing 5 years of data, here's what the final study shows. Very small account friendly, juicy automated target, on average about 50% return. So when I say income, I'm not talking about 3% or 5% or 7%. I'm talking about 50% return on average and a big 75+% success rate over time. And like I said, our current members have absolutely loved this. Yuri said 1,250, easy, bring on the next one. Anthony said 3 wins 100% of the time, exceeded targets every time. Craig said perfect. He made 1,250, just like I was targeting. Howard said 100% win rate so far with a profit of 2,200. In just a moment, I'll show you how those trades can actually stack up over time, whether you've been investing for years or just getting started. But first, let me just mention, if you take one of our memberships today, every single week, I'm going to give you my best automated options income opportunity, one that I'm personally trading as well. So it's not like you're just going to get the live class. You're also going to get every single opportunity every Friday that this trade triggers, which means up to 52 opportunities every year, each one based on the same method that targets about $1,250 on average. Every weekend there's a setup, and every single alert holds nothing back. You're going to get it all broken down inside a very concrete, clear-cut strategy, the ticker, when to place the trade, the exact options, the entry, the exit. It's all in there. Each income alert will have clear instructions on how to place the trade. And I do all the heavy lifting because I'm finding these trades for myself. So all I'm going to do is package up the same trade that I'm taking and send it off to you up to 52 times a year. You'll read the alert and follow along if you choose, just like May 17th last year. Perfect example of this. I sent out the trade. You would have got it right in your inbox. And anyone who took the trade could have clocked out for the next 6 days while this trade went to work and nailed a $1,500 winner in just 6 days without having any idea what was going on or needing to exit the position yourself. Your laptop still could have been closed. You could have still been on vacation, and that trade would have hit automatically. And you don't need to be sitting next to your computer waiting for the entry opportunity either, because I post the trade at the same time every week, Friday around 2 p.m. So you have plenty of time to get in before the end of the week. I want your experience with automated options to be as hands-free as possible. Of course, alongside email alerts, you're also going to get a cell phone and a Telegram update just to make sure you never miss a trade alert. Just like May 24th, the very next week, you would have gotten the email, you would have gotten the text, you would have gotten the Telegram. Take the trade if you choose, and sure enough, automatically exited just about 10 days later on that one. So after just 2 trades, random examples that I happened to pull from the last year, you would have ended up about plus $2,826 on those 2 trades. So that's enough to pay off some debt, maybe help out the kids or grandkids, maybe plan a vacation. Again, those are great choices to have. It's just nice to actually have some extra cash. I don't know about you guys, but for me, most people I talk to make some money, lose some money, make some money, lose some money. Then they might have a nice run. Then they have a big flush like we've seen for the last 4 weeks, and they never truly get net ahead. But actually having something that compounds with a high enough win rate, a high enough risk reward, has clear enough filters that we avoid most of the downturns, we take advantage of the upswings. Now you have something that can actually stack up some gains consistently. And of course, speaking of stacking up gains, I'll give you the trade tracker so you can see exactly how this has performed over time, so you have everything you need to succeed as an automated option member. Again, just 2 trades randomly that I pulled out of that tracker would have ended up at about $2,800 in profit. And remember, you're going to get, 40 or 50 more over the course of time. So if you're wondering if it's going to cost $2,836, well, this is actually my favorite part of the entire presentation today, because I built this to help you take advantage today and make sure that you're in for our Friday opportunity, and to make you feel like you're getting the entire membership for free if you join today. Now, I'll cover more on that in just a second. First, I want to highlight one of the biggest benefits of being a member of Automated Option. You see, there's something I really haven't even got to talk about today that takes Automated Options to a whole new level. I hinted at this earlier. These are designed. We're not just taking a Friday trade no matter what. These are designed to activate on a very specific set of signals that occur on a very specific set of stocks. And that's really what juiced up our testing to go from 55% all the way up to over 75%. And so to get an edge that big, I don't simply just deploy the trades whenever I feel like or use any options that I feel like. We did extensive research and testing to develop a system that only isolates the most optimal weeks for entry. So if you guys are wondering, if I'm trading every Friday and we want a bullish move, how have we sidestepped the last 4 weeks? Well, it's because of this criteria that's built into the trade to keep us on the sidelines and out of the ruts when we get those harsh market-wide sells, just like we've seen the last couple of weeks. And really, the whole goal here is that I only want to put my hard-earned money on the line when I have very high conviction in the opportunity. And that's what this is all about. Now, the details and the code for that is obviously way too much to get into today, and I wouldn't share that part for free anyway. But if you take one of the limited memberships and automated options, I will give you the inside scoop. I'll give you the entire automated plan. It gives you full details on how the data, stacks up over time, how it works, the win rate, all that kind of stuff, which takes into account 2 different bull markets, 2 different bear markets, actually 3 bear markets now because we just entered one, a Republican in office, a Democrat in office, high inflation, low inflation. All of that is built into the data so that it proves, listen, this is designed to work regardless of what's going on in the world. Now, I'm sure that having this data, because I really think we kind of cracked the code here with how to avoid those sell-offs, but still get to capitalize on the up moves, is worth its weight in gold. But of course, if you're an automated option member, you get all the data, you get the methodology, you get the strategy completely free, and you can even apply this to some of your other trades as well if you want to. And remember, I will walk you through actually taking these trades during our next members class. All you need is a standard brokerage account, internet connection, and a few minutes to set up the trade before the end of the week. So forget about paying $3,500, forget about paying $24.97, which is the main price on our website. Today, I have not just a better deal, I actually have the best deal ever for you. And real quick, there's one more awesome bonus everyone tuning in should know about, which is customer support live. So if you ever have questions about the membership, the strategy, the trade alert, are you in the right trade? Is your target set up correctly? You can join customer support live throughout the week. All premium members get free access to this. So if I can't answer your question timely enough, jump into the session, join Ask Cam or Gustavo or anyone who's on customer support live, and they can certainly help you out. Now, for new members, I'm going to offer 3 bonuses to kick off automated options membership for you today that's going to take it to a whole new level. So after analyzing more than 5 years of data, I think you already know the story through 2022, through the COVID collapse, all that crazy stuff. When you stack up all that data, winning and losing weeks, what you end up with is starting with 5K over the course of, those, whatever it is, 160 trades or so, you end up with $101,000 in extra income. Again, that's through all the craziness. So let me just say that again, okay? After all types of markets, 2 bull markets, now 3 bear markets, good economies and bad ones. We've seen both, including a 10-month grinding bear market in 2022 and the massive collapse we've seen so far in 2025. Anyone starting out with just 5K per trade would have stacked up over $100,000 in extra income throughout all of that craziness. And so when you compare that to the S&P 500 over the exact same time period, obviously it's not even close. On an annual basis, you're looking at $540 a year compared to $19,000 a year. So about 40x the returns that you would have got in the S&P. And with the current pullback that the S&P, returns, it would have gotten even worse because I didn't even calculate that. So with that, let me reveal my first bonus, which is that I want to start you off with a free additional year. That means when you join today, you'll actually get access for 2 years of automated options for the price of one, something I've simply never done before with automated options. And that brings me to the second bonus. Because the goal here is that even though $24.97 I think is a incredible no-brainer, especially when you get 2 years of access, I think we're about to take advantage of another cycle where we flip on the turbochargers with the strategy. I mean, I really think we're close here where this kind of strategy can absolutely kick it into high gear and stack some incredible opportunities. So I want you guys in on this. I want every single person in the webinar in on this with me. And ultimately, my goal is to see people pay off their membership as quickly as possible. So bonus number 2 is the charter membership discount. I want to invite you who are in here now to be part of the charter membership. And instead of getting that $24.97 online retail price, you can join for half off. Okay. That's today, not just the 1 year, but the entire 2 year is part of that. So again, I've shown you how the average target here is about $1,250 in income each time we get a winning opportunity. And so if you join today right here in this room, you can get complete access to the automated options, all the stuff, all the bonuses, tracker, everything included there for just $1,250 right now. And if that's not good enough, I do have one final bonus. Like I mentioned, my goal here is to make this membership feel like it doesn't cost you a dime. As a matter of fact, I want you to have it completely paid off before the second trade alert even goes out, knowing that every dollar you make after that initial investment is just gravy on top. So bonus number 3 is the live trade scholarship. This week, I'll be hosting a live trade room where I'm going to take you through all of the details of the automated options. Plus, we're going to place the next trade on camera, targeting about $1,250, enough to cover the entire membership fee. Again, that's based on the $2,500 stake. That's the stake I'm going to use. And you'll be able to look over my shoulder and follow along step by step if you like. Now, of course, I can't guarantee that the next trade is going to be a winner, but what I can do is I cannot start your subscription until the model portfolio shows at least $1,250 in profit. That means your subscription won't start ticking until the membership is 100% paid off according to the live trade tracker first. Okay, so to be clear, you still got to join, still got to access so that our system can give you access and all of that kind of stuff. But I won't actually start counting the time against you until we show that net profit. So that way, you know, hey, we're going to be in the winning zone before the time on the membership even starts counting against me. So again, the live class this Friday is only open to members. So don't hesitate. You can jump in right now. We're going to post the link here in the chat. And if you're ready to put the automated options to work for you, go ahead and join at prosperitypub.com/AOP. You can also call 904-706-3537. That's our new number. That's the concierge team that can get you locked in directly if you want to take advantage of that. Okay, again, you can simply click the link in the chat. Raleigh just posted it for you. You can click that link directly in there, prosperitypub.com/AOP. That will give you immediate access to the $1,250 deal. It's already discounted on that page. Plus, you're going to get 2 years of access, which is something that I've never done before. Now, once you join, the most important thing after joining is that you don't want to close the next page. Okay, this is very important. Once you get that $1,250 locked in, don't close the next page, because on the next page is where you can upgrade your membership to lifetime, where you get no renewal fees ever again. Plus, if you're a lifetime member, you also get the code. Okay, so this code is what helps you set up, is this a verified week? Are we going to get a trigger? And you can use this on the stock that we traded, but you can also use it on other stocks like some of my members have been doing. Now, once you get it, there's actually no install needed. You can access this from anywhere in the world with just a couple clicks, because it's on TradingView, which literally is a web-based browser that you can get for free, but you can also do it on Thinkorswim too. Okay, so it's on both of those now, where you can easily access it. That's for lifetime members only. Okay, so if you want to get lifetime membership, no renewal fees, and you also want to take advantage of that indicator code that we use to find our opportunities in real time, you can join lifetime on the second page and you'll get access to that. Now, just to cover some of the obvious questions here, how much money is needed? Well, the average trade is actually only about $50. So I normally trade, 40 or 50 contracts, but you could trade one contract and get in for about $50 a trade. Will every trade be a winner? Of course not. I can't guarantee every trade will be a winner, but I am happy to show you all the data, and I'm certainly fine with taking a few losers along the way to ultimately take advantage of what I think is the single most powerful income opportunity out there using automated options. Okay, should I be worried about more downside? Well, certainly yes. I mean, I think the market is chaotic right now, and there should be some concern about downside. I'm hoping that the bull run is really going to start kicking into gear here. I do think we're close. But the beauty of this system is we don't need a raging bull market. Literally, all we need is a couple spikes over the course of the entire 14 days, and we're going to hit our target. That's the beauty of the strategy. So that's what I love about this. I think it's perfect for, any condition, but certainly ideal if we start getting another bull run here where we absolutely crush it like in 2023 and 2024. That's certainly what I'm hoping for. And I think we're close, guys. And that's why I'm excited to kind of start talking about these strategies again, because I think the people who really do well over the rest of 2025 are going to be the people who are jumping back in to take advantage, not the people who are just on the sidelines licking their wounds. And so for me, it's time to start thinking about being bullish. That's why I moved more cash into my account, starting to accumulate, and certainly getting very excited about trading automated options with everyone in here. So join, hit that link. We're going to take our next trade live on Friday, go through all the steps, real money trading, answer all your questions, target about $1,250 based on a $2,500 stake, and try to get the membership paid off in just a couple of days, ideally, if we're able to hit a winner. But like I said, if we don't hit a winner, no problem whatsoever, because your membership will be delayed until we're on the winning side. So that makes it really easy for you guys if you want to kind of have a no-brainer opportunity. Plus, for the first time ever, you get 2 years for the price of one. So I can't really make it a better deal, I think, than that. But go ahead, click that link in the chat and take advantage. And I'll look forward to seeing every single one of you in that live trade here on Friday.
Well, hey, Nate, that was a terrific presentation. And during the course of that discussion, there were several people that asked some questions, and I've kind of grouped them here for you a bit. Mr. 71 and Sam want to know, what level options do I need to have to take advantage of what you're offering here, Nate?
So this will be level 2 options we use for automated options. Some brokers now switch around the levels, but pretty much any broker with level 2, because this is risk defined. We're not taking open-ended. We're not taking naked options. We're not doing anything complex. We're taking risk defined, very straightforward debit spreads. You can typically do that with about 2 clicks inside any regular brokerage. And if you're not familiar or you've never traded them before, don't worry, most of my members never had before either until they joined automated options. And now I have a whole bunch of people in there who absolutely love trading this way, because it really does open up a whole new possibility in the market. So I highly encourage you, if you don't do anything else, get level 2 anyway, whether you want to join me or not, because I think it's a very important thing and a very important step to have for traders.
Absolutely. And the key word there for me was risk defined.
Yeah.
When you go into these trades. Some other questions that came up of people kind of curious, what are you trading? Indexes, individual stocks, combination of the both?
Well, if you join, you'll get the entire strategy, A to Z. But yeah, we're trading incredibly highly liquid instruments. We're not trading weird small stocks or anything like that. We trade some sectors, we trade some major indexes. You'll see all the details in there, but we are trading the most liquid instruments out there.
Wow. That makes all the sense in the world to take advantage of this. And Daphne asked the question, and I think this is what's on everybody's mind. Nate, will this really work in down markets?
Well, great question. And to be fair, this works great. This works best in bullish markets. This is really capitalizing on moves in the market. But the key is you're not going to be, stuck in a bear market. You're not just going to be taking a trade Friday, hoping for the best and getting, hammered by a bear market. We very carefully try to sidestep these downturns, which is what we've done really well the last 5 or 6 weeks. And then we try to capitalize when the market gives us a signal to go back to the upside. And then even in that trade where we enter, we don't need the market to actually finish higher. We don't need it to go straight up. We just need a small move at some point during that trade to hit our target. We're out, locked in with a winner, even if the market does continue selling off. Just like our most recent trade, we did trade on XLF. Now, if you look at XLF over the last couple of weeks, it's not exactly a pretty chart. Okay, I'll just give you a free heads up here. If you type in XLF, you're not going to see a very pretty chart. Yet, in the middle of that downturn, we had a juicy winner because all we needed was that little move up after our trade, hit our target. We were on the sidelines. We avoided the chaos, and we made money. Is that going to happen every time the market's selling off? No. But the idea here is that you have a big enough edge that you hit it at a high enough win rate, a high enough risk reward, and you'll be able to stack up gains over time, and that's our goal.
Yeah, and I think the other thing that you said earlier in the presentation is when Friday rolls around, and once again, Nate, you are placing your own money at risk on all of these trades, okay? There may be situations where the market's just not giving you what you want. And at that point in time, you'll sit on the sideline. So I know that you'd like to be able to over deliver in this program, but you don't want to feed people trades just because it's Friday and I need to get a trade out. Is that correct?
Yeah, we have a very, I mean, you'll learn if you go through the strategy guide, a very clear set of instructions, very clear filters. It's a yes or no binary trade based on the system. We're not guessing, we're not predicting, we're following a very clear set of signals. And when we get a go ahead, we place it, and when we don't, we pass on it. And some members got frustrated with me, for a couple of weeks of skipping a trade. I think they now are thankful that we skipped some trades.
Sure.
But I get it. You want to trade, but this is designed not to just put us in a trade every week, but to isolate the best opportunity, trade it when we get it. Normally that means about 40 weeks a year, you'll get a trade. And no, this is not naked. We're not owning any stocks, nothing like that. It's a risk-defined spread, simple to put on. You do need level 2 permissions, but you're going to risk about $50. So you need very little risk exposure here if you want to start small and scale up over time.
Sure. Some people were interested in, once again, what are you investing to make that 1250? And I think your point was you're, investing $2,500 on each one of those trades, Nate.
Yep.
And so the next question was, man, how many contracts is that? Well, is that 1250 divided by 50?
It's usually about 50 contracts for me. Now that
Okay.
assumes the price about $50 a contract. The price might be $48 or might be $53, but this thing is very, very consistent. You're gonna be right around the same wheelhouse every trade, right around the same cost, right around the same target. I mean, it's just incredibly consistent with the way that we approach it because it's a system that we built from the ground up. And so you want to trade 10 contracts, risk $500, target $250, start there. You want to do 20 and target $500 a week, start there. I mean, you can really kind of set your own pace here with as much scale as you want. I mean, Steven, many of you guys know Steven. He started doing this with a $600 account, trading automated options. Started with 1 or 2 contracts, then did 3 or 4, then did 5 or 6. And so, you can start small or you can start big. We're trading the most liquid instruments out there. So you can put 1,000 contracts on if you wanted. It's really just up to you and what your risk profile is. And if you want to start small and scale up over time, I think that's a great way to do it. It's how probably most of my students started, 2 contracts or 5 contracts, and now they might trade 100 contracts.
Sure. That sounds terrific because once again, given what you're trading, these are highly liquid, very scalable. You can get it with a single contract, or to your point, put in 100, 500 contracts.
Yep.
It won't make a difference with regard to what you're having to work with. Let me see what else we had here, Nate. Several people are interested to know, how does this compare to some of your other programs that you have out there, like the weekend options and things of that nature? Because I know that you love trading options and you have great ways to trade the market. So you have these individual strategies. How is this differentiated from some of your other programs?
So this is what I would consider my flagship service. The best way, I guess, for me to kind of explain what that means is on all the active trading that I do, which I do a lot, 7 or 8 different kind of active trading things that I try to incorporate. I will typically put the highest capital attribution into this setup. Okay. And the reason is because it is a longer term. Now, by longer term, I mean 2 weeks. I don't mean months. I mean 2 weeks compared to like an overnight trade or, right, something like that. So it's a longer term trade in that sense. It's 2 weeks, and I'm only going to get about 40 of them a year. And so the profit factor kind of baked into that number gives me a risk assessment and attribution, which is just a long way of saying I have a lot of confidence in this strategy. It uses different filters than anything else. And over the course of time, if you kind of put my hands behind my back and said, hey, you can really only trade one thing consistently, what would you trade? I'd probably say automated options, because it just has the ability to both filter things out and then stack up gains really effectively at the same time, which is, hard to find in a single strategy that kind of checks all those boxes.
Makes sense, Nate. Makes sense. And so, guys, I hope you're really taking in what Nate is talking about here, because, I'll just refresh. This is his flagship approach, and this is where he allocates most of his capital on a trade. But he does have a number of ways to trade the markets. Okay, so one is not better than the other. These are all designed to basically complement each other in many ways. And so once again, that's what I really like about the programs that he has. So Daphne was just asking a clarifying question. She says, so that means you're looking for, you're looking for a pullback, for example, in a downward looking line. And I don't know that you're necessarily looking for a pullback, but you're expecting that there's going to be a 1% move,
Right.
over the course of that period of time, even though that market may be moving down. And we all know things are not linear. They do not roll like this. They tend to move like this when they're going up and when they're going down. And so that's your expectation. Is that correct, Nate?
Yeah, and I don't trade looking for a pullback. I wait for confirmation. So if you read the strategy guide, you'll see there's a very clear confirmation built into the system. So we wait for confirmation, then we trade and we look for continuation. Actually, not a pullback, but actually continuation once we get a confirmation signal for the upside. Now, we don't need the market to make new highs. We need to make a small move at any point during the trade. And that's where the advantage is so big built into this. And so, yeah, I mean, like I said, this is one of a lot of different ways that I love to trade, but this is kind of what I would consider the flagship just because it has that balance that I just described. It's a little bit longer term with the 2-week trade. I can roll it over. It filters out trades. It's also kind of the first strategy that I developed with this kind of automated exit thing. So it's kind of near and dear to my heart, just literally for that reason alone, that it kind of was the foundation for a lot of the other stuff that I do. But I always say, asking me to pick my favorite strategy is like asking me to pick my favorite kid. I mean, I'm not going to sit here and say like, oh yeah, this is the one that's the best. It's kind of the foundational thing that I've built a lot of other stuff on. But obviously I'm sitting here trading all of these strategies and putting my own money on the line. And I wouldn't do that unless I, believe in each one of them. So hopefully that, kind of clarifies where I stand on the strategy side of things.
Exactly. And once again, each one of the things that you use to trade the markets has a specific application,
Yep.
and a specific record and win rate, etc. So interesting question here. On those off times when the trade doesn't work against you, Nate, are you suffering the entire loss, or do you mitigate your loss if you believe, for example, it may not turn in your favor?
Yeah, great question. I'm usually fine taking a full loss. Now, the reason for that is actually very simple. If we're giving the trade 14 days, which we are, to make a move, we want to give it the whole 14 days. Because what you want to do is you want to maximize the possibility for that move to occur. And the best way to do that is to simply give it all 14 days. So, for example, if you're 12 days into the trade and you're down, you might say, oh, now's a good time to minimize our losses. But the reality is that 13th or 14th day, all you need is a spike in the market, a big gap up or a big intraday move. Now you're going to turn a losing trade into a winning trade by giving it the extra 2 days. And by the way, I've tested this extensively. I've tested it with, loss mitigation of 20% and 30% and 50%. The reality is, what shocks most people, the best way to get a net positive profit factor is actually to maximize the time horizon on the trade and give it a chance to hit the target. So again, I feel very confident in my willingness to let the trade, kind of sit there and give it the max amount of time. Yes, it means I take a full loss on occasion. I'm totally fine with it because it gives me the best opportunity to churn out wins. And we've seen that happen in real time. I mean, Henry's in here and some of my other students. We had trades that looked like they were dead in the water, like that May one I gave you. They looked dead in the water in week one. Any person would say, hey, you should close out the trade early and take your loss. But in reality, we've seen the market pivot and make dramatic turns. All we need is that turn to happen in the course of a day or 2 days. And now you've turned a losing trade into a winning trade. And for me, if you want to talk about what's the biggest advantage, how do you build a system? How do you get ahead? How do you build a positive profit factor? Really, it's simple. How do you turn losing scenarios into winning scenarios? How do you turn trades that most people lose into winning trades? For me, 2 things. Use the automated exit. In other words, have a target that's sitting out there waiting to be hit. And number 2, maximize the time horizon that you can let the market do that. If you do those 2 things alone, which automated options is incredible at doing, you're going to win a lot more trades.
Man, it makes all the sense in the world, giving the opportunity, the room to grow, room to breathe, if you will, because the markets work that way. And then once again, you have a modest profit target that you really amplify through trading options. And I
Yeah,
think that's
and the reason I can do that is because it is risk defined, right? If it was open-ended risk, I couldn't sit here and say, yeah, just give it all the time in the world, you'll be fine. But we have defined risks. We know what our risk reward is going to be. We know what our profit factors is, expected to be. We know all that information going into the trade, so we can set it up and say, this is how the trade works. We give it the 14 days. If it makes that move, we're going to cash out. If it doesn't, we're going to take a loss. But we know all those parameters as soon as we set up the trade on Friday.
terrific. Now, Nate, I know that I think you mentioned that the average hold time was around 8 to 12 days. So that means there might be situations where we're in 2 trades at any given time. Is that correct? Or do you like to close out on one before you move into another?
No, we can have 2 trades open. Now you can't have more than 2 trades. 2 is going to be your max, which is pretty easy, pretty easy to manage. About 75% of the time, you'll have the other trade already closed out before you get into the next trade. But sometimes you'll have 2 open, and there's no problem, doing that. You could have $1,000 in each. You could say, hey, I'm going to do 1,000 on the first one. I'm only going to put 500 in if I have a second one. Like, you can manage that a lot of different ways, but totally fine to have 2 open at the same time.
Excellent. Well, folks, once again, this is Nate Tucci sharing his flagship way for basically trading options, where he's looking to place a single trade every week, targeting a 50% return on his winning trades. And once again, doesn't mean this is any better than any of the other strategies he's have, but what he really likes about this, and particularly in today's conditions, is that this is something, once again, that is the way that he prefers to trade the markets. He does this regardless of whether the markets are moving higher or lower, and that's where we are today. Nate, once again, thank you so much for your time today, and not only today, but the effort that you and your team put into bringing this strategy into play. I know you've got hundreds of people that are in your program, pretty satisfied with what's going on. And I tell you what, in today's environment, folks, when you consider everything that's going on in the markets at this point in time, I think it's nice to have somebody like Nate in your corner. That's just my thing. Nate, before you go, any final words for the folks that are here?
I mean, I guess just the shameless plug, get in and join me before Friday. I'd love to have everyone in there. I think it's a great opportunity. I mean, my honest feeling, I don't want to pressure anyone or like be that guy, but my honest feeling is, you fast forward a year from now, I think at some point you're going to see, the market make that recovery, and you're certainly going to have love to, take advantage of it and not be kicking yourself, wishing you wouldn't have, stay on the sidelines. And so I think, to me, this is just an incredible opportunity to put yourself in position to take advantage of when we get this run. Hopefully, like I said, get it now, but whenever that comes, I want to be in position that I'm not the guy who looks, back and says, oh man, look at this 30% recovery we had in the stock market. I sure wish I made some money on that. Right. I want to be, fully in. So I guess that's kind of my challenge to everyone. Have a strategy that's in your back pocket where you're ready to capitalize. This is where people make money. They make money when everyone else is hurting. The Buffett thing is not a new idea, blood in the streets, right? And so I'm hoping that, I can help provide that to a lot of people, and they're ready to take advantage. And that's what I'm planning on doing.
Excellent. A couple of last quick questions before I let you go. Some people are saying, so Nate, we get the chance to trade with you live in this program?
Yeah, I mean, I normally do about a session a month. So, maybe 10 over the course of a year, including this Friday. We'll trade live this Friday together. So let's start off strong and hopefully get a winner. Fingers crossed. But yeah, I'll be in there ready to trade, showing my charts, all that good stuff.
Outstanding. So folks, you heard it there. I mean, not every trade is going to be traded live, but he likes to do maybe once a month, but you get everything that you need in the alerts to be able to place these trades. And there's a ton of information on your member site, where Nate explains exactly what he's doing, the logic behind these trades, etc. Last question here was, Nate, your focus is just on bullish opportunities. Do you ever try to trade a bearish opportunity?
I do not. The system is designed with the underlying principle that the market will be more bullish than bearish over time as the single biggest benefit to the strategy. Does that mean sometimes you take hits if the market is grinding lower, like in 2022, your win rate goes down? Yep, your win rate goes down. But if you think that you're going to have more 2023s than more 2022s over the course of time, which I certainly do, you're going to want to take full advantage on the bullish side. And we have filters to help, kind of capitalize on those moments. So I am shamelessly only bullish on this strategy.
Fantastic. Nate, thank you once again for your time, for your clarity, for your transparency, and everything that you do for us. Have a great day, buddy.
All
I
right,
know you
thanks,
got a
Raleigh.
bunch on your plate. So,
Great seeing
folks,
you.
once again, for those of you that came a little bit late to the presentation, my name is Raleigh White. I'm the senior moderator here at the Prosperity Pub and at the Trading Pub. And we just heard a presentation from Nate Tucci on his flagship, approach to trading options, where he focuses on a single trade every week, giving it the opportunity to move in his direction over the course of a 14-day period of time. And all he's looking for is about a 1% move in that to generate 50% more profit return on the options that he trades. So, a couple of things real quickly here. This is a live presentation and it is being recorded. And if any of you would like to have a link to a copy of this presentation, all you need to do is put your name and email address in the chat